Good evening, everyone. Tonight, we're turning our attention to the economic landscape of China. A nation that has captivated the world with its meteoric rise. For decades, China has been the economic juggernaut, a powerhouse of manufacturing and innovation. It powered global growth, fueled by seemingly endless expansion and a relentless drive for progress. But now, the music's off-key. The rhythm has changed and the beat is faltering. Why is China's economy, once the envy of the world and a symbol of unstoppable progress, facing a steady decline? What are the underlying factors contributing to this shift? We'll break down the top 10 reasons behind this economic slowdown, from collapsing property empires and a real estate market in crisis, to a government that often seems to value control and stability more than sustainable growth and innovation. This isn't about fear-mongering or sensationalism. It's about understanding a seismic economic shift that has far-reaching implications for the entire world. We'll use hard data and verifiable information, expert opinions from leading economists and financial analysts, and maybe a panda visual gag or two to lighten the mood. Let's dive into the facts and figures behind the headlines and explore the complexities of China's economic slowdown. Let's start with the big one, real estate. It's a sector that has been a cornerstone of the global economy. And nowhere has that been more true than in China. For years, China's property sector wasn't just a part of the economy, the economy, driving growth and investment at an unprecedented scale. It accounted for nearly a third of the country's GDP, a staggering figure that highlighted its importance. The prevailing logic was simple: build, build, build. It was a mantra that fueled a massive construction boom. But they kept building at an unsustainable pace long after demand dried up, creating a glut of properties with no buyers. The bubble inevitably burst. Giants like Evergrande, once symbols of China's economic might, defaulted on their debts, leaving millions of people in the lurch with worthless, half-finished homes and shattered dreams. A staggering 65 million apartments, enough to house the entire population of France, now sit vacant, a stark reminder of the excesses of the boom. These ghost cities are not just empty buildings, they are monuments to misallocated capital, a flawed growth model, and the perils of unchecked ambition. As economist Michael Pettis astutely put it, China built far too many homes for people who simply didn't need them or couldn't afford them, all funded by unsustainable levels of debt that they ultimately couldn't repay. The property crisis is more than just a market correction, it's a wrecking ball, smashing household wealth, crippling local finances, and casting a long shadow over the entire economy. And the unsettling truth is, this is likely just the beginning of a much longer and more painful adjustment. With property collapsing, you'd hope consumers would spend. But they're scared. Consumer confidence is at rock bottom. Retail sales are weak, savings are at record highs, youth unemployment is over 20%. People are hoarding cash, not spending. It's a doom loop. Fear leads to less spending, which leads to fewer jobs, which leads to more fear. Government handouts haven't worked, the Chinese consumer isn't coming to the rescue, the economy is sputtering, running on the fumes of anxiety. China was the world's factory, but that era is ending. Trade wars, tariffs, and global pushback are squeezing China. The US and EU are investigating and blocking Chinese goods, citing overcapacity and unfair subsidies. De-risking is the new buzzword. Countries are moving supply chains away from China. Foreign investment is fleeing. For the first time in decades, more money is leaving China than entering. The era of globalization built on cheap Chinese labor is over. China's biggest customers are shopping elsewhere. China's population is shrinking, a stark reality that presents significant challenges for the nation's future. This demographic shift is not just a minor fluctuation, it's a fundamental change in the structure of Chinese society. This marks the first time such a decline has occurred since the tumultuous period of the 1960s, a time of immense hardship and upheaval. The one-child policy's legacy, a policy implemented to control population growth, now casts a long shadow. It has resulted in a rapidly aging society and a record-low birth rate, creating a demographic imbalance that poses serious economic and social challenges. Young people aren't having kids. The desire to start families is waning. The costs associated with raising children are simply too high, placing immense financial strain on young couples, and the culture has shifted, with changing priorities and values. A shrinking workforce means less growth, impacting the nation's economic potential. This also means more strain on social services, particularly healthcare and elderly care. Ultimately, this leads to a soaring dependency ratio, with fewer young people supporting an increasingly large elderly population. By mid-century, China could lose over 100 million people, a staggering figure that underscores the severity of the demographic crisis. An economy is a human system, and China is running out of humans, threatening its long-term prosperity and global standing. No stimulus can fix a baby bust this big. This isn't a problem that can be solved with short-term financial injections. This is a generational headwind that will last for decades, requiring long-term strategic solutions and a fundamental shift in societal attitudes. Local governments are drowning in debt. During the boom, they borrowed massively off the books using shell companies called LGFVs. Now, with land sales collapsing, their main revenue source is gone. Hidden local debt is estimated at $9 trillion. Many can't pay bills or keep public services running. The central government is wary of a bailout, and local governments are broke. This fiscal crisis means no big stimulus is coming. A key engine of China's growth is now useless. With property, consumers, and local governments tapped out, Beijing is doubling down on manufacturing. State subsidies are flooding high-tech sectors, but the world doesn't want more cheap Chinese goods. Overcapacity leads to price wars. Companies sell at a loss, fueling deflation. Businesses cut investment, consumers delay purchases, and the economy stalls. Overproduction is creating global backlash and internal stagnation. China can't build its way out anymore. The world and its own people can't absorb all this excess. Youth unemployment is a crisis over 20% and rising. Millions of graduates can't find jobs, leading to lying flat and let-it-rot social movements. Disillusionment is rampant. Young people are checking out of the rat race. A society where the youth have no hope is a society in retreat. Innovation and growth depend on young ambition. China's next generation is losing faith in the system. China's private tech sector was once world-beating, but the government cracked down. Jack Ma vanished, IPOs were cancelled, and new regulations hit hard. The message: no company is bigger than the party. Innovation and investment have dried up, entrepreneurs are scared to take risks. Foreign investors see only political risk. The crackdown wiped trillions off company values and stifled dynamism. China is killing its golden goose of tech innovation. Deflation, falling prices sounds good, but it's economic quicksand. When people expect prices to drop, they stop spending. Businesses see profits shrink and debts grow heavier. It's a toxic feedback loop. Less spending, less hiring, more fear. Japan's lost decades are a warning. The IMF says China risks a similar deflation spiral. Deflation quietly paralyzes the economy. The biggest problem? Politics over pragmatism. Under Xi Jinping, ideology trumps economic reform. The party wants growth, but only on its terms. Control comes first. Entrepreneurs and investors are paralyzed by uncertainty and fear. The system is rigid and less adaptable, just as challenges mount. The tools to fix things are known, but require ceding control. Something Xi won't do. China faces a 21st century crisis with a 20th century playbook. China's era of hypergrowth is over. Managed stagnation has arrived. The party wants a dynamic economy without giving up control. But that contradiction is now hitting its limits. Unless major reforms happen, expect a slow, contentious decline. The global implications are huge. Stay tuned for more analysis. Thanks for watching. Like and subscribe for more in-depth breakdowns.